Wow, what a round of applause. Oh my God, let's try that again.
Guys,
I guess we'll sit in this order.
we're in this order, Ty.
All right.
You ready to go?
Yeah, let's do it.
All right.
Panel of the conference right now.
All right, so we're here to talk about cryptocurrencies and Bitcoin and the blockchain from a wealth management perspective. I actually brought this panel together personally. I think they're three of the wisest people in the space that understand the nexus between traditional investing and trading and Wall Street, and then all of this. And I think there are some really interesting things that we can get into in the relatively short period of time that we have. To my immediate left, Tyrone Ross, who is a founder at Noble Bridge. I've got Mark Casady, who is with Vestigo Ventures, a founder and the former CEO of LPL, one of the biggest brokerage firms in the country. And then, of course, Ari Paul, who probably needs no introduction to this crowd. Ari is the founder and CIO of BlockTower. So, guys, thank you for joining us.
Thanks for having us.
I'm going to ask the first question that I think is probably on everyone's mind, and I'll let anyone jump in who wants to answer it first. What the fuck? I was here last year. We were all rich.
The room was filled. It was
WTF? No, but so I don't want to make this whole thing about price, but like it's the elephant in the room. So just like Ari, like in the most succinct way, how can you describe what the last year has been like as an asset manager in the space who talks to wealth management clients? Those are your LPs.
Sure. So first, it's kind of easy to forget. We were here September of last year,
Okay.
and actually with a very similar story where Bitcoin fell from 4,500 to around 3,000 on the story that China was going to ban mining. That would cause a vicious death spiral in hash power. Bitcoin might just be done. And that immediately preceded then the rally to 19,000. So from a technical analysis perspective, which I'm not good at, and I'm not just a way of framing things, is we've now retraced the entire parabolic rally, which kind of feels almost right. Not to say this is going to be the bottom, but had this crazy retail-driven speculative fervor.
It feels right because it never should have gotten to where it got?
Right. So we had a really clear kind of short-term retail, momentum-chasing, get-rich-quick, people who didn't know what they were buying. And now we're back to where we were before that happened. So you don't need, like, people often look for an explanation like there clearly something has to have fundamentally broken to have a market fall 70, 80%. And not really. If a market goes up 1,800% in a year, and a big chunk of that is just kind of retail buying who don't know what they're buying, you don't really even need a reason to retrace that excess.
So Mark, you've got extensive experience in the traditional asset management, wealth management,
Sure.
broker-dealer world, and you've watched this probably from the same perspective that I have. So what are your thoughts on what's gone on in the last year? And what it means, if anything, for the future?
Well, I think a couple things. One is every boom has a bust, right? Just nature of it. And in fact, I think having a bust is a wonderful time now because we've got to get this through this phase, right? Whether it's speculators that were essentially setting all sorts of prices different ways and essentially manipulating the market to some degree into the boom that was there and now followed by the bust. It's going to happen. And so get this over with. It may take another couple of years for this to really get through the phase. I believe that we may be towards the bottom, and my prediction is only from my 22-year-old son, right? A kid who's never speculated in cryptos or any other assets calls me yesterday and says, what's the best wallet again for me to buy some of these assets now? So I'm just telling you, my 22-year-old son is in. There you go.
It's worth more than my
Exactly, so
portfolio.
we'll see. But I think,
Treasure.
all dollar of it, yeah. But as you look at it, it's just a natural cycle. I have been around a few booms and busts in my day. Name an asset category, I've watched it boom, I've watched it bust. It does get through it. What's more important is, are we fundamentally creating a new category of investment? We think that we are. When we think about it from Vestigo's standpoint, and we think it's a matter of time, whether it's 2 years or 5 years or 10 years, this is a category that's going to be around and it's going to make a difference.
Tyrone, you have the same job description as me. You're an RIA. Mm-hmm. You're an investment advisor to households.
Yeah.
But your clients also know that you've got this expertise in crypto, even though you're not giving advice and charging for it, on it because, frankly, we can't.
Right.
But they want your views, and even though it's not investment advice, they still want color on their holdings away from you. So what do you make of what you've seen over the last year?
Well, it's funny, as I've been saying, from top to bottom with my clients, I haven't gotten one email, one message, one anything about panic from not one of my clients. So it's interesting. I have an interesting perspective because the retail investor that everyone says has gotten hurt and left the market, and now we're focused on institutions. Everyone is ignoring the retail client. And what my clients have done, they're crypto natives, they're young, they're liquid. They want no exposure to traditional assets, so they see this as an opportunity to buy more of what they believe is going to be, their internet stock, so to speak. So what I try and do is, for one, try and get them to diversify away from crypto into more traditional asset classes. But I've actually just, the whole way up was an education, and then the whole way down was an education. And more importantly for me, because again, I don't recommend anything, I don't pitch anything. They come to me and say, hey, what do you think about the Bitcoin Cash fork, right? So in dollar terms, the U.S. stock market is essentially flat this year. In Bitcoin terms, it's the greatest year in the history of the world. Right.
So it's like getting people to recognize that if we price things differently, we can look at them in a different perspective.
And just to be clear, right, if you look at what Bitcoin has done this year, look at the first 3 quarters of the year. It wasn't what it is now. A lot of this is recent. So it wasn't, again, it was stale for the most part. But again, I think at that point, my clients were coming to me and we were just having conversations about, well, what do you think? And literally they're coming to me saying, I'm buying X amount of, Bitcoin per week or whatever. And I'm like, all right.
So I had a conversation with one of our clients who was a Microsoft executive, now retired. And his comment on cryptocurrency and Bitcoin as an investment, forget about the technology, but as an investable asset, his comment was, it's a protocol. None of the value accrued to any of the previous protocols, even the ones that gain widespread popularity. SMTP for mail, HTTP for web addresses. The layers built on top of these protocols is where the value accrued. So his attitude was, if there's a public company that finds a way to make money as a blockchain company, I'm way more interested in that than in owning shares of the coins in the protocol, in this case, Bitcoin or Ethereum. So Ari, I know you're making bets on the protocols. So how would you respond to that?
So token economics is a really new area. There's some things where I would very clearly argue, I could say with confidence this doesn't work, no value will accrue. We have basically no data points of success. The one case that's really simple, clear, and that I would argue strenuously for is if an asset is going to be I think the first use case of Bitcoin is as something like Swiss banks, offshore banking. So it's a place to store wealth that is seizure resistant, where it's hard for any one judge in one locale to take it, or a corrupt police officer or politician. And if you think about it, it's 100% profit margin. So if I want to protect $100, I have to own $100 of Bitcoin or Monero. So it's 1-to-1. For me to get $100 of utility, I have to own $100 of the asset, whatever the price is. So that's a pretty simple, the value has to accrue to the protocol for that use case. For every other use case, it's more complicated. Okay.
And so Mark, you're making a lot of investments on the venture side in the layer that's going to be above the protocol. So you're not making these directional bets on coins.
Right.
You're saying these are businesses that are coming along that are going to make the blockchain functional.
Right.
And that's where now, having run a broker-dealer, you know probably better than anyone in this room the costs of moving money, of executing trades, of having custody being proven that things are where they're supposed to be.
Right.
Tell us a little bit about why that's what you're the most bullish on.
Yes, I think there's two things. One is that if you look at financial services broadly, take any category you want, essentially it's all too expensive. That the problem that we have is whether it costs $30 to send a wire as an individual, or whether it costs me 1.5% as a small business to essentially use a credit card, that is way too expensive for what the actual movement is. This is a tiny fraction of cost that's there. And so what you see happening in financial services broadly is this crushing of cost. It started with ETFs against active managers, and that's really where it began, let's call it 10 years ago. Now you're seeing it show up in the form of infrastructure plays that are there. One of the things we tried to do at LPL was really lower our cost as much as possible, ship that back as much as we could to the advisors who used our practice so they could win more business in the marketplace. So if we think about that theme of how do we take cost out of a system, blockchain, crypto assets, digital assets, securitization, tokenization of assets are all ways to really remove a ton of cost and to make all this much easier for either storage of value or for transfer of value that's there. So that's the theme we're trying to invest in at Vestigo, is how do we invest in that infrastructure that dramatically lowers that cost.
So to follow up then, what if the story of wealth creation in blockchain is really a cost-cutting and efficiency story rather than a growth story? Meaning,
it can be both, though, I
the
think.
best use case is Vanguard saying we can shave half a basis point off our $1 trillion funds because we're doing trade reconciliation with an open ledger rather than with a third party.
It's just a matter of when it's coming.
So, but no coin goes up as a result of that.
No.
That's not an investable thesis for this audience.
Right, it's exactly the applications point you were making before. And now it could be that I issue a token as a company to essentially allow me to build that, right? I could do an ICO. Right now in the US market, it's obviously mixed in terms of a lack of regulation, but this too will pass. And as that becomes clearer how I issue a token, you certainly could play it that way. So now I've got a token that allows Vanguard or others to join into a consortium that allows me to build that infrastructure, would be a way to play it for this particular audience. We're playing it in a more conventional sense. We're backing companies through debt instruments and through equity instruments that allow us to help build out that infrastructure. It's interesting, in our portfolio, we have not seen a single blockchain application that we think is investable.
Wow.
Which is remarkable. We've seen 800 business plans, probably a good 50 blockchain-based business plans. And
Some of our audience would beg to differ.
I'm certain of that. I'm just based on the early stage outreach, exactly. But the reality is it's really tough, right? It's a tough technology to use today because it's still got refinements that have to be made on the application side. So I personally think the protocol side and thinking about the fact that the investment in cryptos and digital assets by themselves has value, both in a wealth management standpoint and in the standpoint, obviously, of a hedge fund or institutions. And secondly, you've got what's going to happen with the technology that underlies it that allows us to do things better, faster, cheaper, is clearly two themes we're looking at. We tend to be betting on the better, faster, cheaper just because we're a relatively conventional venture capital fund.
So Tyrone, there's a Capgemini study that came out this summer where they asked millionaires under the age of 40, most of whom are in this room, and they said, one of the big conclusions from the study was that young millionaires, 70% of them say it's important for their primary financial advisor to be the person that gives them information about cryptocurrency and Bitcoin.
1,000,000%.
Meaning they don't want for there to be another person they have to talk to. They're looking for that kind of all-in-one expertise.
Yep.
Now that was done over the summer at probably 7,000 or 8,000. Maybe that percentage has dropped somewhat as people have lost a little bit of interest, but I have to assume it's still high enough to warrant you saying to yourself, well, I'm not going to let there be some third party. If I have a young millionaire client, I want them coming to me with those questions.
Right.
Is that what every financial advisor needs to think about right now? Even if they're skeptics, do they still need to be the primary person that the client goes to for information in this space?
1,000,000%. So look at the landscape, right? And I have some thoughts around this, and we've dialogued about it as well personally. So as a financial advisor, I truly believe if crypto goes to zero tomorrow, and it all burns down, it was fake, our business has changed forever. Financial services firms and those that offer financial advice, it's changed, it just has. So now look at the retail landscape. Where can all of my clients go to own Bitcoin? Square, Abra, SoFi is going to offer it, right? You got Coinbase. The list is endless where they can actually go, and some of them actually have assets there. But what they realize is they do want a human behind that to be able to say, okay, well, what do you think of the coin bundle at Circle? Or what do you think of it at Coinbase?
They don't want to read every article on CoinDesk all day.
Exactly.
They want somebody to filter it and tell them what matters.
100%, which is also why I believe financial advisors are going to morph into financial consultants, because if you look at what's going to happen in the future with fintech, our clients are going to have the ability to bank, manage, account, all of these themselves, and then they're going to come to Josh and say, hey, I have stock options, what do I do? Right? I have an inheritance, what do I do? Right? I have I had a 5% allocation to Bitcoin, it's now 75%, what do I do? The AUM part of it, the actual allocation to passive and active, that's done. There's so many options for young clients nowadays. And look at it, the oldest Gen Z right now are about 25, right? The iPhone was introduced in 2007. So look at that. They're going to grow up with the ability to do everything from their phone, everything. But what they can't get out of that phone is, all right, the market's down 80%. I need someone to talk to and walk me through. Do I double down on Bitcoin or Ether? Do I look at some privacy coins? Whatever the case may be.
Right.
So I think
the argument they have too much capability at their fingertips, and it's
way too much. So I think that's where we're going to earn our money in the future as being, again, consultants and giving really high quality advice, but the investment piece is completely taken away from us.
This whole management of money versus management of emotion,
right?
That is a real issue. At LPL, I'd say that out of the 12,000 advisors that we had, let's call it the top 700, they were really managers of people's emotions,
100%.
right? They may have managed a portfolio. They certainly had an opinion about crypto assets and that kind of thing. But the reality was they were there to really help that individual deal with the market being down big time or dealing with a 2008 crisis. And that's a fantastic service. That is incredibly valuable.
Incredibly valuable.
And you can buy asset management pretty cheaply now.
All right. So shifting gears, let's talk about vehicles and products. So my contention is that absent an ETF, and I don't mean a Swedish ETF, absent a New York Stock Exchange listed or ARCA listed ETF, this is not a wealth management topic. It's a curiosity. It's something that wealth managers should be aware of, but I just don't see this, and I understand that Fidelity lets you see your Coinbase holdings, and the two things are starting to flirt with each other, but until there's like an investable asset that doesn't have custody risk, and that's what I think an ETF does. It's not a wealth manager. Am I right about that? Am I wrong about that? And how likely is this is everyone's white whale that we're all chasing. I mean, I'll start with you, Ari. How likely do you think it is that within the next 12 months, and maybe recent price action makes it harder to get approved? I don't know. What are your thoughts?
Well, so first, Fidelity, I believe, are still saying that they're on track for Q1 to offer a full Bitcoin custody solution. And regardless of
how... For retail or for institutional?
I'm not sure of their intentions. I would assume they would start with institutional and then lower, okay. But I don't know.
So that's a big one.
Yeah, it's huge. And custody is all about trust. So I think in finance, we're really trust brokers generally, but custody, it's times 10. Because the average person is not evaluating, we've, as BlockTower, been evaluating all the up-and-coming institutional quality custody providers, and that means diving deep into sources of entropy and hardware.
Like top three. If you get like Fidelity, Bank of New York Mellon, or JP Morgan, I think like those are like...
Right, it's just a trusted name. It's a trusted name. So the point is that is on the horizon unless Fidelity cancels it, and there's a lot of other, Coinbase is offering theirs and gradually becoming more institutional. They're not Fidelity by any means yet. But the hopes are not all based on Fidelity. Goldman is opening a trading desk. They'll probably be custodying for their clients.
Okay.
A lot of people, myself included, thought the futures would have a bigger impact because it doesn't require custody. You don't have any risk of technical failure. Ownership is clear cut. It's easy to have a normal administrative process around, for example, an endowment can own Bitcoin futures without having to worry about who has the private key and what are the processes around that. That didn't have the impact many hoped for, myself included. So I don't think there's any magic bullet on the institutional side. If an ETF was launched, it's not that there'd be suddenly massive institutional flows. I think if on the announcement you'd get a massive rally because people price in forward looking, but
I think BTC from this level triples on an approval of an ETF.
I agree, but the point is that's not because you suddenly get 50 billion of institutional money. It's because speculators price it in.
Right.
I'm saying that's what the speculators will do.
I agree, and I think that would be warranted because it's a massive because this is a trust game, and having the futures was a meaningful data point. So whenever an institution says, "Wait, isn't this a regulatory gray area?" I can pretty easily say, Bitcoin's not. The CME and CBOE both offer futures on it. CFTC fully approves it. There's regulatory gray area around the security issue, around ICOs. Bitcoin, there aren't really any regulatory issues, and you can see that with that data point. So ETFs just provide this growing infrastructure. I think with an ETF, basically every RIA almost has to look at it. Endowments, Harvard, Stanford, Yale, and MIT all publicly invested in crypto in the last 6 months. So it's gradual. Custody is a huge obstacle. The questions of legal and technical, by technical ownership, I mean like what happens if a private key is lost, what happens if there's an error.
Insurance against that.
So there's a lot of these things that are critical, but it'll still be, I think, a gradual process.
I want to throw this one out to whoever wants to jump on it. I find the grand irony of this conversation to be that this is supposed to be about decentralization and the democratization of financial services and, you know, the whole spiel, which is fine. I don't have a problem with that. But then the things that seem to get this audience the most excited are centralization projects backed the New York Stock Exchange.
At least ironic. Yeah.
Essentially inserting itself as the world's biggest middleman into, right? So people are like, that's an upside catalyst. CBOE and CME, could you be more centralized than the two biggest commodity exchanges, regulated exchanges? And then we had this conversation about the SEC blessing us with a registered 40 Act fund or an ETF under exemption. Like, if this is about decentralization, and I don't want to use the term anarchy, but like, kind of like the crowd is now in control of their own shit, then why do we get most excited about projects where 20th century middlemen are going to step in and take over? I don't understand. Like, I don't understand. Which do we want?
Well, it's what I'm about to say is probably heresy for our business. I'm not a fan of the Bitcoin ETF. I wouldn't put my clients in it. Wouldn't have them look at it. My partner probably thinks I'm nuts.
No matter how it was structured.
I don't care. I will not do it.
Okay.
And I also don't think that it's going to be this, you know, knight in shining armor is going to come.
Moment.
No, I don't think that. I really don't. And and maybe that's just me getting back to the true ethos of what crypto is, but I love the fact that folks are able to control their banking or their own assets themselves. Now, there's an education that comes with that, and I think that's one of the things in this space that's sorely lacking is education and getting retail investor education around what it means to be self-banked, because you kind of do it anyway with your iPhone, so we just have to walk clients through it. And again, those that are younger already know it. But I think a Bitcoin ETF is a joke.
But you could go into the dankest subreddit at like 4 in the morning and like find the people that have paper bags over their heads. And
Crypto
as
hippies.
off the grid, like fringe as they are, they're talking about when's the Bitcoin ETF. Like,
I know, but that's the thing. It's you're going back to the whole centralized. And again, what brought me to this space was the disdain for our business, right? And financial services in general. So it's like fintech is disrupting this whole thing, and I love it. So why are we going to go back to now begging Wall Street to save us?
Think of it merely as marketing. Think of it only as marketing. This is an ETF. Regulation that comes along, all that stuff, whether it's Fidelity doing custody, these are really critically important for marketing purposes, right?
100%.
Helping explain to someone who's in their 60s, who's saved a lot of money, who's interested in it, whose children are probably investing in it, and being able to say, oh, that's a brand I know, that's something I can trust. This isn't just some crazy person with a bag over their head, right? This is something that's really interesting for me to think about investing in. And I think that's the key that's missing, in my view, is you just don't have the brand name players that are able to really do that marketing. Once you get through that part, then you get to the essential question of, can you use these tools in essence to essentially remove a ton of costs? Can you use them to essentially control more of your financial life? That, for me, is the power.
Right.
That's a big part of what I want to do.
So a really key thing here is that these people don't control the Bitcoin protocol or network. If you want to use it in a decentralized way, you can, and it becomes more valuable for that. So if I want to control my private keys and run my own node,
you can do that.
As a store of value or as a means of transferring value, I benefit from a higher market cap and more liquidity, and this is a really key point. Bitcoin game theory, its security relies on there basically being more capital that has skin in the game than capital that wants to destroy it. So we know that eventually there are going to be state-level actors that have an incentive to destroy Bitcoin. We know right now there's corporate interests that can profit by shorting, and so we actually want skin in the game from people who are wealthy and powerful. We want there to be central banker. So why hasn't China actually banned Bitcoin? There's a lot of Chinese people who own a crazy amount, including politicians.
Hashtag Bitcoin game theory.
Yeah. So from my view, as someone who very much believes in the decentralized use case for individuals, for refugees in an anti-state context,
large interest to have
I want high market cap, which supports everything. So higher market cap supports more hash power, which supports more security. The key thing is these people don't get to control the network. They're almost they're creating value that then anyone gets to use.
Every market leads liquidity. You've got to have it, right? Whatever the source is.
And again, I agree with that. Right now, with the ETF is going to be great for all of those things. What pisses me off is, again, I have retail clients. I have individuals and friends, and you probably as well, that's gotten smoked over the last year. And now it's like, okay, well, these people have been decimated. Now let's really bring in all the big, powerful Wall Street money and people with money, and then it's the same wealth transfer that it's been forever, right? So this was a chance to break that up and give people an opportunity now to get access to wealth creation tools and to financially be free from that bondage of having to go to Bank of America. And like I saw a couple Sundays ago, people standing outside of a bank at 30 degrees, standing, waiting outside of a bank for the bank to open in 2018.
Crazy.
It's crazy.
So I have time for one more, but we have to answer it in lightning round fashion.
Let's do it.
So I'm going to ask you bullish or bearish on this one. So I know there's a lot of skepticism about tokens, but the more I think about it, the more I come around to this idea that actually the best investment case for crypto is tokenizing real estate, giving people liquidity in buildings. Maybe you could do this with shares on an exchange, but maybe tokens are better. Why, bullish or bearish on that concept? Is someone going to do that well?
Yeah, but it's like equitization. So you have GLD as an ETF. It's still gold. So real estate tokenization, you get more divisibility, fungibility, easier to transfer, 24/7 global pool
Do you
liquidity.
think that has a good shot at becoming a wealth management /
Totally.
real estate solution?
And I think regulators in a decade will require it because they can program regulation into the contract and have total transparency and control.
And
so prediction, regulators in maybe a decade, in 20 years, regulators will require
Equity market
programmable
regulators
securities.
will require real estate projects to be tokenized.
All securities will have to be
jurisdiction?
programmable.
Yeah,
all
all
securities will have to
Okay.
be programmable eventually, called 20 years.
Mark?
Bullish. I absolutely believe that securitization
You guys
solves
have
a lot of
anything in that
problems.
space?
We don't have anything. We're partially because we don't invest in products. So,
Okay.
but we are trying to invest in the infrastructure that creates those product structures. But long story short, is absolutely bullish because it solves for a lot of the issues that you've raised, which it lets a small investor get a piece of something they couldn't get.
You
It lets you,
can't- right, you can't
create
buy
liquidity in
a
a
piece
different
of a
way.
building,
Exactly. It's
but
a
maybe- okay.
wonderful way to do it. And it's not just buildings. It's think of almost any asset. It's there. Securitization is a very valuable tool.
Maybe a professional sports franchise tokenizes.
Wouldn't that be fun?
The Packers, maybe.
There you go.
Tyrone, what do you think about that?
I'm begrudgingly bullish on that. I'm coming around to the whole tokenization thing. I think it would be cool if a client comes to me and says, hey, I think there's high quality real estate in Dumbo, right, that I want to invest in, and there's a building there that's tokenized and I can get a piece. Great. I think that's fascinating, but I think, yeah, to that point, all assets will be digitized, but I don't know what that means in terms of, again, being
Or
in
let's
wealth
say your
management,
client's
wealth
afraid of
creation
buying a
tool.
house, right? But they should buy a house because it's a smart tax deal, right?
Right.
If they could offset that with a house in some other location,
Right.
a small piece of somebody else, that would just be a good
Well,
edge.
you'd be surprised about how young folks feel about home ownership these
Well,
days.
fair enough.
But no, that's a
Yeah, but
that's a
if
really
you
good
think about
point.
it as a
It's true.
financial planning
Yeah,
advice
absolutely.
for someone who's not fabulously wealthy or
Yeah.
Final question. This requires a simple up or down. No abstention. It's November 27th. Year end. BTC higher or lower than where it is. No one's going to hold you to this. Don't be nervous. But what's your best guess, Ari?
Yeah.
All right.
I'm going up based on
that thumb went up slow though.
That was as close to ambivalent as you'd let me be.
Wow. Ooh.
Ooh, you're down.
All right. Take the side entrance out of here. All right, guys. Thank you very much. How about a round of applause for my panel?
Thank you.
Thank you very much. Thank you, guys.
Thanks.